the S&P 500 has continued to go to the upside. You can see here, we found a support in the zone that I referenced in the last YouTube video and has been able to maintain above and continue above. And if you remember, I talked about this zone last time and referenced how as long as we stay above this zone, it's likely we'll see at least short-term dips get bought. That has been the case so far. And now we have extended quite a bit from where this box is. The top of this box is around 503 high. Right now we closed close to 513 on Friday. In order for bears to kind of take the reins going forward from here, they're going to want to see a breakdown below this previous supply range, now demand zone, in order to have a lot more chances of a new downtrend emerging. Because again, like I said, as long as we remain above here, you're going to see short-term dips continue to get bought, and that has been the case so far. Now, macro-wise, I personally believe in between kind of around this 515-ish to let's say 520 max range, we likely see some type of a local top form. Now, there is a lot of risk in attempting to short something like that. Personally, I'm not going to take any type of a put contract setup until a level like this can get broken and show that one, sellers are willing to step in, but then two, a reversal candle, at least on the daily or multiple daily candles, can print and also confirm that as well. That's two variables that need to align. Both have not been the case. Now there's also alternatives to shorting up here within this range. I'm not going to get into that in this video, but personally, I'm looking to enter some type of a triple leveraged bear ETF around this, like I just said, 515 to 520 max range. That's something that I'm looking into this week, but at least in terms of options, which is the purpose of this channel, I'm not interested in shorting until we can see this range break here, which is also very similar to the range we have here on QQQ. Now, the QQQ range that I have here is fairly wide on the 50 minutes, around 438 high to 440 high. So it's about a $2 range. And this is also a previous supply zone because we had a rejection right here on February 12th. We also had a rejection here on February 23rd, hard rejection early on in the session, and then another rejection over here on the 29th. And then finally on Friday of last week, we saw continuation up to break above the level, which warranted this entire squeeze to the upside. So very similar to what I just showed you here on the S&P 500. If I were to take a put position on QQQ, I'd like to see it fall below 439-ish, 438 high, back into this previous consolidation zone. If that were to be the case, that would confirm that a local high is printed, and then therefore a new downtrend can emerge to retest the previous all-time high level, at least on the S&P 500, which would be around 4,800 on SPX. So that's my plan right now. Both of these ranges are a bit different for each level. For example, the QQQ one is a bit higher than the S&P 500 one. So there's going to be a difference between each, and that's why I trade each separately. But the premise remains the same. We have a range here on the S&P 500, and then we also have a range here on QQQ. Until either range can break, there's no short setup that I see, at least in the short term, other than if you were to accumulate some type of triple leveraged bear ETF shares, which is also very risky as well, even though there's not the same risks of variables like theta, because the decay is very minimal on those products. You're still attempting to short against the trend, and that's something that I'm going to attempt here soon. And you just need to make sure that there is good risk mitigation in practice, and I'm going to have a stop criteria before I enter that trade setup as well, just because shorting against an aggressive uptrend has a lot of risks in it. So you need to make sure that that risk is mitigated, as you always should in any type of trade setup. But something else I do want to talk about in today's video, if we go here, Nvidia flow, still consistently bullish. In the last video, we talked about a little bit more call selling hitting the tape, but that was soon reversed on Monday of last week and stayed consistent throughout the rest of the week as we saw a lot more calls being bought. And no surprise, because if you go over here to Nvidia's chart, we could see it continued to the upside and actually looks fairly bullish right now, because we had a little bit of a pullback here, consolidation, and then a break higher to retest that previous high, likely just based on how it closed on not only the daily but the weekly. We see some more upside early this week. So that's something that I'd prepare for. And also, along with that, these calls we saw on Friday, very bullish, out the money calls for May expiration. These were over 10 million in premium sweep orders. And then also the volume was over the open interest overall. So these were opening orders that were out the money. These are very aggressive bets, especially with how heightened the IV is on something like Nvidia. You can see here the price of the contract's like $62. That's very expensive for these contracts, and they got these above the ask. So these are aggressive bets. They bought these when Nvidia had a spot price of about 802 and 801. And you can see here, just based on the close, it closed Friday at 822. So these guys were very happy by end of day, and they were able to profit quite a bit on those contracts. And that's been the case since the beginning of the year now with Nvidia. I always make sure to reference Nvidia flow at the beginning of the day, especially the first hour to 90 minutes of the session, because if you see something unusual like this, which if you follow the Twitter account, they post a lot of these unusual prints that have hit the tape on Nvidia since the start of the year. A lot of these have ended up being very profitable overall, and eventually, of course, that will change. It's not going to always go up, but it has been going up for a very long time, and these traders have been consistently nailing every single move for the most part for that upside and profiting handsomely from it. So I expect them to continue to do that until it stops working, and so far it's continued to work. So I always reference this typically as something that I like to do, like I said, within the first hour to 90 minutes, but they were able to nail another move here, very similar to what we've seen now for the first couple months of 2024. And we've only seen upside so far in 2024 on Nvidia, even after earnings as of a couple weeks ago, or about 2 weeks ago, when we saw that large gap up and the market followed. So in order for the market to also roll over, like I referenced for the S&P 500 and QQQ, those ranges, we also need to see semiconductors roll over as well. One of the semiconductor ETFs, this one here, broke out of its own supply zone on Friday. So it's going to be key to see it break back below this supply zone. This ticker is SMH. If you're unfamiliar, this is one of the semiconductor ETFs that's out there. This has performed very well this year, obviously, because all of the semiconductor industry has been doing good, but we'll need to see a breakdown back below this previous supply zone, now demand zone, in order to warrant a new downtrend and local top confirmation. Until then, like I said, with the S&P 500 as well as Nvidia, we're going to see short-term dips get bought as long as it remains above this range. So don't try to step in front of the trend, especially on semiconductors, unless you do have some type of tight risk mitigation strategy in place. And last thing I do want to mention here is the VIX, because something interesting happened last week. We had a breakdown of the upward trend line. If I go to the daily chart here, you can see this is an upward trend that started at the end of 2024. So back here on December 14th, and you can see it's been tested 1, 2, 3, and now 4 times. And on the 4th time, we actually had a close below on not only the daily, but also the weekly. In order for bears to have any chance at taking over, they're going to need to see a reversal and weekly close back above this trend line right here. So right now, the uptrend has been broken. It's a little bit different when you're dealing with something like the VIX compared to an individual ticker or an index for that matter, because these don't respect technicals as much as an individual ticker, like I just said, or index. You can see over here, we actually had a daily close below back here on February 8th, but the weekly closed right on the following day. So I was able to hold here. We did have a weekly close below, but that also can reverse because again, volatility is a bit difficult to do technical analysis on, but it still respects key trends like this uptrend. As you can see here, no surprise, we had 3 successful retests and bounce from this range. This is now the 4th one, looking like a breakdown right now, but something to look at, especially intraday, is if we're able to reclaim this around 1340 and hold above, at least on the daily. Weekly is best for confirmation, but if it's able to get back above on the daily, we can see some type of reversal occur on the S&P 500. Until then, though, as long as it stays below, we're likely to see continuation to this upside in the market. So that is what I'm watching. And actually, one last thing I'd like to share is dark pool levels from last week. The previous week, we had a decent amount of dark pool prints. You can see here, though, the higher levels haven't really received too much in overall premium. 1.2 billion here, 1.7 billion here. These are about the same, so roughly around 3 billion overall. And then if I scroll down over to here, we can see this is the large one that I wanted to show you guys. And this is just from Friday of last week, but this is a large one, 5.3 billion at 508.82. This is interesting because, well, one, we did close above, if I go back to SPY over here, but again, super rare to see that large of a print. So this level is definitely be key to watch. It's 508.82, so I'll mark it here on the chart. I would suggest you guys do the same. You don't have to look at the specific level itself, but just around the general area. This is definitely a level that has to break if we're going to see more downside all the way down to this range over here. So in the future, you're going to want to see this break if you are bearish or want to see a bearish outcome or a downtrend emerge. This is going to be a critical level to break below. because as you can also see, based on Friday, it held for the first 45 minutes of the session and was able to squeeze to the upside afterwards. So this level is definitely critical just because it has a significant amount of dark pool premium on it. So this is something you'll want to watch going forward, especially if we have a retest of it, because one, a retest is probably going to be bullish off of this level, kind of like what we saw from over here. But then two, if we actually had to break down below, that can start to shake things up, and we can start to target a little bit lower back down to this range from over here, and we can see a downtrend emerge. But this level so far is acting as a support, and we saw quite a rally off of it as well. But if I look over here to the rest of last week, just to show you, this is the last thing here in this video. Again, we talked about higher prints not having too much. The 5.3 billion obviously is a key level. This is also very close to this 3.6 billion at the 508.80 level. So about a 2-cent discrepancy here. Total premium is about 9 billion in overall premium. So that is why this level is so critical. Not only was there the 5.3 billion, but then also there's the 3.6 billion right around this with about a 2-cent difference. So very critical to see this hold if you're a bull and break if you are a bear for future price action. And then as I go down here, you can see not anything too crazy around the 508, 507. We have 1.2 billion here, 1.3 billion. And then as I scroll down, 2 billion, 1.4 billion, really the meat of the prints from last week were all the way up here around this 5.3 and 3.6 billion dollar print. So this is definitely going to be my focus this week if we're able to see a retest of it, because like I said, you can form some type of a bull bear bias based on where price is in comparison to this level. But regardless, as always, I appreciate you guys watching this video, and I will see you next time.